that I've been waiting for. I've been doing business with her for a few years. I've never met her in person.
Really?
What? Yeah.
What?
Yeah.
I thought she was here.
Yeah, she said she's on her way.
Oh, really?
Yes, she is.
Okay.
Potatoes?
Potatoes.
It's gonna be here at 11:30.
Oh, really? I thought I seen her car outside, but maybe that's not her car, that's someone else's car.
Someone else.
Yeah.
Yeah, I thought so too.
Yeah.
You guys can eat now while it's hot.
Yeah.
We have brought all of them. So.
Please.
Oh.
Yeah.
Hi, Elba.
Hey, that Elba. Hi, how are you?
After 5 years or how many
I
years?
know,
We finally
forever,
meet.
right?
Oh, hi, Peter. How are you?
How are you?
Good. Nice to meet you. He's done my loan for 5 years and this is the first time we've met. I know, that's what he said. Yeah.
I was like Charlie from Charlie's Angels. Meet me in person. I'm not exactly Bill Murray, though. So, you're good, you're good. Yeah, Cecilia was gonna come, but she got jammed up because her pipeline exploded.
Oh,
Yeah.
I'm Chris, by the way.
Hi, Chris.
Nice to meet you.
yeah, to get out there to remember. Or like leave here at 12:30.
I didn't see your text. I told her to meet me here at
So that's gonna
11:30.
be day one of it,
I
right?
came from Lakewood.
Yeah.
And it was like so bad.
I came from Lakewood too.
Yeah, fancy.
He was showing a property.
I give you credit for that. No, look at some more.
I'm getting that one clean because
You guys
hopefully
can
getting ready to
come
close
make a
it.
plate.
I'm getting ready to
Salad.
close that one, so
Oh,
it's being cleaned right
I can't eat the
You are
dressing,
here.
but I brought my.
Oh, thank you.
And this is yours.
Oh, it is? Oh, no, wait, hang on. Can I get some before you do it?
Yeah.
Just because I can't eat their dressing, I would be so grateful. Thank you so much. Sorry, go ahead. Go ahead. and then-
Wow.
Pour all the salad dressing on.
The whole thing, just do it and they do, okay.
Guys.
So how's Cecilia? Good?
She's good. We got her working.
Good, good.
Cecilia's my wife. She's actually my dedicated processor, and she actually pre-underwrites every file for our branch.
Oh, since you had this one, how did you find him?
So, Elizabeth Senga, she's a Maritza and I are friends and we have a mutual friend. She met a buyer who had his own lender. That's what she told me, right?
Yeah.
And then she says, hey, I met this great guy. He does really good loans. And I was like, okay, let me try him. And we've been ever since then. Yeah.
We've done some pretty fun ones though, right?
Oh, yeah. Oh, my God. I think we should be in jail. But we're not gonna, I don't know details or anything, but yeah.
Like I always tell you, the less you know, the better.
Yeah, yeah, but it's been great. And just recently got, I have the listing that I have in Bixby Knolls. So she does accounting. She's a radiologist. They make really good money. And I've already sold them 2 other properties and they will not change lenders. I've been with them for years, blah, blah, blah. I'm like, okay. So they got approved 5.1 up to 1.2 million or something. So I'm sitting there going, I go, why don't you just, let's call my guy. Let's see. And sure enough, 4.875 fixed. And now they're changing, you know, a lot of time. And she called Ron, and he just says, so not all the lenders have you know,
The same program.
the same program, so, and Ron couldn't do anything for her, so. Now he's got a,
Awesome. And then the lower rate gets them a little bit more purchasing power too, right?
yeah, exactly, especially in this competitive market.
Because a 1/4% at that level could be $50,000 to $100,000 in loan approval, right? So
Yeah. So, now they changed language, so, and I couldn't get her to change.
Thank you.
So are you his manager?
yeah, but the way I see it, you know, I work for him, so you gotta keep him happy, so he keeps producing. So he has a good support staff.
Yeah.
We do everything in-house, so
Yeah.
if he gives you an approval, it's an approval.
He's who I cry to.
She's
Are we-
who I cry to.
Are we good to start? Do we have enough people here?
I think we have enough people.
Yeah.
There are 300 agents in our office, but these
Nice.
are the hardworking agents.
Well, I heard they're
Weird to
gonna
me,
record it
imagine if
and put it somewhere, right?
Yeah.
That's what someone was saying.
Let's keep the profanity level down. Okay.
Oh, man, I better leave. Okay. Thank you for the
You're
food.
very welcome.
So,
So we're gonna kind of go over basically like all of our different products, what kind of makes us different from your average lender and all that good stuff. And, you know, Christian will kind of come in also. So if you kind of open up your folders, summer's coming, so we put some Franklin little beach balls in there for you guys. And we'll kind of just start with the flyers and then just stop me. If you guys have any questions, it doesn't even have to be on topic, however you guys want to do it. So you have the three basic loans that are probably the most popular loans are going to be FHA, conventional, and VA. They make up for about 95% of the marketplace. So, you know, 95 out of 100 homeowners are going to, you know, get financing, you know, through those avenues, right? Then as you move a little bit towards the higher end values, jumbo is going to be a big product, which we have a lot of different jumbo investors that we use. And then you have all those buyers that don't fit into that certain box. And so that's what this first page is going to be. Is kind of all those other loans. So the first one would be the bank statement program. That's going to be for self-employed borrowers, a lot of time real estate agents. Hey, no one likes to pay taxes. We're going to have probably maybe embellish some of our write-offs. We can afford buying, let's say, $1 million house, but on paper, I just don't qualify for. I'm a business owner, but I do deposit into my bank. With those, we can go up to 90% LTV, which means minimum is going to be 10% down. So absolutely, we have about 3 different investors that do the bank statement program, and that's going to be, but they have to be self-employed people that are depositing money into their banks. That's a really, you know, simple product. We're going to need either 12 or 24 months of bank statements, just depending on how much assets they have, how their credit is, right? So the more money they have in the bank, and the more, do you have another one? I think that was the last.
Oh, that's okay.
Okay. And then he'll grab all of your cards. He's gonna email you all these,
Oh,
okay, when we're done. Because there's also one flyer that didn't print up, and that's one of the best ones we have. I'll go over at the end that we're doing a lot of loans with, but he'll grab your cards and then he can email you guys all this stuff. So yeah, so depending on how good their credit is and how much money they have in the bank will determine if we're gonna do 12 months bank statements or 24 months bank statements. They can be personal or business, okay? ITIN mortgage, so they have to have filed tax returns for 2 years on their ITIN. So basically, and obviously have credit established on their ITIN. If they have potentially a fake social security card that they're using to secure credit with, obviously that can't come into play. It has to be someone that is using an ITIN for both credit purposes and tax
Let me
purposes.
step in on that. We can actually get around that one if they file their actual tax returns with the ITIN, because we're gonna go off the tax returns as opposed to the actual W-2 form. It actually works better for a self-employed borrower.
No, you're good. Interject all you want. And if you have something that doesn't fit in any of these boxes, obviously he's your contact person. You know what I mean? It's his job to take your buyer and get them approved. And you know, we were making a joke earlier, but we don't break the law or anything like that. But lending, there's a huge gray area where we're able to do some things that are not illegal, which is kind of out thinking, you know, getting out of the box.
creative and aggressive.
Correct. No one, I've been doing this for 22 years, so no one's
Yeah.
typing up W-2s or whiting out anything anymore. And that stuff will send people to jail, but there is a huge gray area to where we can make stuff happen that maybe another lender can't. With the ITIN program, realistically, you're looking at 30% down. So they're gonna have to have some money saved to make that larger down payment. We have jumbo loans up to 95% with no PMI. So it just depends on their credit scores and all that good stuff. We have, I think, 6 or 7 jumbo investors. So even though we are a direct lender, we also do mortgage broker on some stuff. And then we obviously have well over 20 investors, depending on all the products we have. So it's not just like we have our program and that's it, like a bank would, like a Wells Fargo, Bank of America, Chase. It doesn't fit. We don't want it. Our job is to find the investor that wants that loan. So obviously in this market out here, jumbo is a huge product. We do a ton of those. Asset qualifier, if we skip one and go down there, that's going to be for a client that, let's say, doesn't have any documentable income. He's got maybe, let's say, a couple $1 million in the bank, and we can actually use their assets to qualify them from a monthly payment. So pretty simple. It could be investment, stock, bonds, pretty much anything. The investor cash flow or no income is basically if you have a property that's going to yield positive rents or break even on the rents, we can get you into those properties for, it has to be an investment property, obviously can't be owner occupied. So for this guy that's got maybe 5, 10, 15 investment properties, he sees a positive cash flow that he wants to take advantage of. We do not provide any income documents for this gentleman. So basically, if the rent will cover the mortgage, we can do the loan.
I'm only stepping on that, even if it's 0.75% of the mortgage, so it could be a little bit less than the mortgage, but the higher we can get the rents, the better the rate will be. So we actually did that one on your Broad Street listing.
Yeah.
And it closed like a regular loan, 30 days, no income, all we needed was the appraisal.
Yeah, she did the open house on Broad. yeah.
Ah, yes, I remember.
Nice.
I did, it was crazy.
Yeah.
Yeah, the appraiser is going to document what the rents are. We can't, there's nothing we can
Yeah.
fudge there. The appraiser has to document what the rents are. But we do have a good communication with our appraisal group. So the owner of the company, we have access to talk to him directly. So anytime you get a one-off with a property, you're afraid it's going to pass inspection, you're listing it, don't know how much you should list it for, you're putting an offer on with no appraisal contingency, you're wondering what it's going to appraise for, just call or text Christian, and we can find out from the appraisal group that we use what that property is going to be worth, or if whatever's wrong with the house, the heater doesn't work, whatever it is. If you have any weird appraisal question, we can ask them.
So, that's for investment property,
The
The investor cash flow.
the investment cash.
So technically, this is how I word that. Cover your ears, your mouth, Chris.
Okay.
please. You buy it as an investment, but there's nothing that says that after you close this, you can't go over there. Right?
What's the
Okay.
down payment for investment cash loan?
You have 20% minimum.
20, 20 or 25.
And
20.
Just
FICO,
20. FICO 680.
680 and 20% down. That's a good one.
It's a very good one.
Yeah, and that one too, potentially they can even put it, if they're, seasoned investor, they could put the property in their LLC name. They don't even have to buy it as a person.
Okay, that's
So-
great.
And then these programs are all in-house, so we control from the ordering, the appraisal, the processing, the underwriting, the funding, everything goes through us. We table fund.
I was gonna ask about that, but I was just told, oh, they never do that anymore.
No, we
I
do
don't
it.
know.
We actually fund with scanned copies.
And do you, are you servicing the loans or are you
We
selling?
some we service and some we sell, it just
Okay.
depends.
So nothing weird there though,
No, nothing.
but you do table.
They're gonna know their investor of, who we get the loan for pretty early. And so
Yeah.
we let our buyers know before even their
Nice.
first payment. First payment's always gonna be to Franklin Loan Center, because we obviously lend the money because we're a direct lender.
But I
And then
mean,
we let them
some
know who it is.
disclosures anyway,
Yeah.
right?
Yeah.
Yeah, okay.
Usually not an issue, but we do service our own stuff because we sell directly to Fannie and Freddie. So,
Oh, you do, okay.
and that's why we have no investor overlays, which we're proud to say. So basically your DU or your LP, whatever that says, that's our approval. As long as
Nice.
we're putting in the information correctly, the loan is done. We really don't even need underwriting. All they're doing is checking our work.
We can literally do FHA loans down to a 500 FICO.
Wow.
And she said last week.
That's all my clients.
Remember
That's any one of mine.
last week was Escalade.
I'm gonna put a stand at the
Show the
top.
number does on
So the next,
Let's go. I'll buy the Mangoneadas.
Yeah.
the next one, one of the ones I really want Christian to talk about is the bridge loans. Let them know.
Bridge loan, awesome program. A lot of lenders, they advertise it as, have you guys heard of knock? There's where like, let's say that you want to go, let's say you're gonna list someone's property, but they're gonna put 25% down. and they don't want to take a hit, like, because they absolutely want the property that they want. What we do is we give them a short-term loan for 6 months to put their 25% down or whatever amount they want to put. I actually, up in Fresno, I actually saved a transaction up there where they had the property listed up fire, backed out, we were in escrow on the other with no contingencies, and we're like, we hadn't done one in a while because the market's been so hot, so nobody's houses had fallen out. So I was like, all right, I got a fix for this. I said, bear with me. So we were actually able to do the bridge loan. They didn't have to get lowballed on their property, and they were able to buy the house they wanted. First payment, they were able to pay off the bridge loan. Once they got
So then is that to avoid them being a contingent buyer?
Correct.
Because it's so
Yes.
competitive? So
Yes.
that's the only reason to do it.
That's the only reason to do it.
Yeah, or just convenience for the, sometimes you're gonna try to pick up a listing, well, I wanna buy, but I wanna move first, right? A lot of people don't wanna sell their house first or just
Yeah,
deal with the
well,
stress. of it.
especially right now, I know they're nervous because okay.
Yeah, but super simple. We just do a loan on the previous house and it just uses as the down payment for the door. We'll skip here to the ITIN. It's its own flyer because it's kind of one of our one-off programs. Want to give more information, what is and what isn't, since you've done so much of these?
It's gone 50%, it goes up to 50% ETI. I can do it for first-time home buyers, we just have to verify rent. That's it. So landlord, whoever they're renting from, we send a verification of rental. It's handwritten. We make it, they fill it out. Okay, there you go. As long as landlord's willing to play ball, that's usually the biggest obstacle that I have on that. Another one is that a lot of people don't like to report taxes, but again, we work on all that. But it's pretty straightforward as long as you have a well-qualified buyer to do it. So 25 to 30% down minimum and reserves.
You guys come across a lot of ITIN out here in this area, or? Yeah,
All the Hispanic people. A lot of Hispanic.
as long as they have money in the bank, it's an easy product to do. One of the flyers that's not in here, and I'm gonna make sure Christian grabs each one of your guys' cards and he can email it to you. It's one of the ones we do broker out. So it's the easiest loan in the world. It's a true stated income program. Minimum 20% down. So they have to have 20% down. And they're gonna have to have at least 1 year of assets in the bank.
Actually,
6 months,
3 months.
3 months.
3 months.
With the better, he's done more of them, I think, than our rest of our branch combined. So he's the expert at it. So go ahead.
Thank you.
And so you go, so this is my loan. This is what I say. This is for your guy that sells DVDs out of the trunk of his car, owns a liquor store, a bar, doesn't like to report taxes. I don't like
Thank
paying
you.
taxes, but unfortunately I'm W-2, so they get me anyway. So they have their money in the bank for one that I have in escrow right now in this particular deal. They have over $350,000 in the bank. They're buying a $650,000 house that I've gone to another lender. They turned them down. Completely said, hey, dude, you work at Chipotle, you can't buy here. But what he didn't ask the questions that we asked. I said, how much money do you have? 350,000. Cool. How long has it been in the bank? Month. Okay, cool. Said, I got this loan for you, 20% down. He had a 745, so I only needed 3 months reserves. So yes, the rate's a little bit higher on it. It's about a point and a half higher than what we have at par. But he got his house at a fixed interest rate and he's a homeowner now and he's excited about it.
And for that one, you do not have to be self-employed,
No, you can be, anybody can do it.
They're not stated.
100% state. It's basically gonna be just LTV, assets, and an appraisal.
Not even stated, you just have a pulse and a FICO and you do it pretty much.
Wow, back in the 890s.
This one does require, depending on your credit score, it's gonna, the
That's
the
what-
lower your credit score, the more reserves you're gonna have to have.
If you're at a 640, you are gonna need a year and a half of reserves.
So you want 680 plus.
640 plus on that one. As long as they have the reserves, we can do it.
For a credit score.
I'm gonna read off yours.
I was trying to get. Okay, get it. Just I'll follow along.
So the next flyer behind there should be the forgivable equity builder. So not only are we gonna tell you all the, the good programs we have, but this is one that it was on Facebook. A lot of agents were reposting. There's a news, I think a Fox News, something about Calhfa. This is the 10% down payment assistance. Have any of you heard about this? No, okay. We got a lot of calls for it in our Inland Empire branches, but so basically it seems like an amazing loan and it is, but the income caps are kind of funky, which means that like, you can't make more than $60,000 or $70,000 a year combined to buy a house. Which means that unless you're a real estate agent like in Barstow or maybe Hemet,
Yeah.
it's not really a real program. We put it in here just because we have it. We can do it. Sometimes you guys get a referral maybe from out of the area or something, and you're referring it to another agent. We can do the loan. Unfortunately, it's almost mathematically impossible in California to be able to, afford a house but not make too much money on the program.
Yeah.
We also do it. Go ahead.
On a salary of 60,000, what can
It
we do?
didn't. You put so there's
About 280, 300.
280 is the
So like
max.
Arizona's.
Like,
This is just for California. It's through Calhfa. Just
Up
through
north,
California.
maybe even where
So-
we're.
where for 280?
They called Fox News and they put a
Well,
little
the
commercial
loan
on there,
amount.
and it's been like wildfire. Like everyone's asking about it. People are excited. It looks like the government's doing something, the housing department's doing something good for the California residents with, and it's
It's
forgivable. It's
not theirs.
basically, if you stay in the house for 5 years, the money's gone. You don't owe it. 20% each year is forgiven. So it's a great program. It's just the income requirements, they're pigeonholing. Yeah. So, but if you do get a borrower in one of those areas, let us know,
For 280?
far drive, huh? Yeah, that's all I can think of.
The loan amount is what's limited though, not the purchase price.
The loan amount.
The loan
The
amount.
loan,
So
the loan amount.
technically, they don't
10%.
have to have a house for 280, they could only get a loan for that. So like one lender who did not concisely explain it to us. It just took this circuitous journey of explaining that it's not based on the purchase price, it's the loan amount. However, imagine, fine, loan amount 280, the house is $1 million, they'd have to come in with the difference, and that's where it's unrealistic because.
But the taxes at $1 million
It's
would be
just,
too much.
yeah, it's
Yeah.
just, exactly, yeah, like no matter what, it doesn't work, and you guys explained it so much better than when we
So basically,
initially
if
broached
it's
it.
10% down, that's 28,000, so you do 280 plus 20. Plus you'd be at the 30 something.
Yeah.
So yeah, it doesn't.
And if they have their own down payment, 10%, they would never want to use the program because the interest rates are always higher on this program than they are regular. That's where the government gets their money back or Calhfa gets their money back.
And that's the same one that acts as a silent second until it's forgiven?
Correct.
Yikes.
Yep.
No, it's not that juicy.
Yeah. And then, but for down payment assistance, usually the sweet spot, which not here, it's like you guys aren't gonna experience it here too much, about 600,000 to 700,000, anything, that's just for regular down payment assistance. Anything over there, it's impossible. Over there, it gets pretty impossible to do because of the income restrictions and things of that nature. The next one behind that is our Platinum Select for first responders. Another down payment assistance program. Depending on which product they pick, there are some that do not have any income restrictions, which is good. Unfortunately, those have to be paired with FHA loans, so it could be a little funky, but just another kind of tool in your toolbox. These are also forgiven. It's teachers, firefighters, police officers, things of that nature. A lot of times when they come in, they go, hey, is there a special program for me? Yes, there is. But depending on the market, sometimes the rates really stink on these programs. So we're like, oh, yeah.
Really? Okay, because I was gonna ask for as much as you guys could give me on this, because I have an event in a couple weeks that I'll talk to them, but
Okay.
if it's gross, then I won't.
Right now it is because rates are up. And so they're not really giving that much incentive.
So just the assistance, but that's it.
They're supposed to get, well, they're limiting the assistance. How crazy is this? They're supposed to get up to 5% down payment assistance. And right now the state is only allowing 2%.
Now, even though they had to like work overtime and all that, and we were all fighting with each other. Okay.
Yeah, because they get more assistance as the rate goes up and because rates went up so fast, they just,
But that's a wash, it's just proportional then, right?
Right.
and remember too, this is free money to where you can refinance after a couple of years. So you can take advantage of the grant, take the higher rate and then refinance a lower rate if rates are good at that
And
time.
And does that have an
First time
income restriction?
The FHA one does not. There's one that we have on the Platinum, not the Platinum Select, but on the FHA product, there's no income restriction.
On the Platinum Select, last question, is there, oh gosh, I forgot, it wasn't about income limit, that was a good question. Oh, do they have to be a first time buyer or no?
No.
Okay,
On all the Platinums, they don't have to be a first time buyer.
that's. the
We've even
next
done them for
one.
refinances.
We've been doing with 2 units.
Wow, okay, so gross for now, but stay tuned.
Just keep it, if you hear
Okay.
there's firefighter, nurse, teacher, just know that there's probably something we have today, no, but just because it's a little funky, but in a month or 2 months, maybe yes. So just
Okay.
kind of like put
So I'm
another.
like safe to say I know somebody that has a product.
Yeah.
You know what, I had asked Chris to give me an Excel spreadsheet, like of the different programs. I
Right,
know.
where you can compare them next
But
to each
you know
other.
what I do? Chris, qualify him, this is his number, and that's it. I don't
Yeah.
care. Because it's hard to remember, then they keep changing. So
Well,
it's just better to
That's the
say.
thing is things are changing so weird. I mean,
Yeah.
it's just
And
weird.
so even
Yeah.
stuff
let
that I
them do it.
know of, and then Chris puts them in like a totally different, better, so it's just, sorry, I just find it easier to.
Oh,
Hey,
no, I'll go
Chris,
with that,
Here's
yeah.
Mario Lopez, qualify him, this is a number, reach out to him, and then he'll just do it. Because it's so hard, you know?
Well, especially something like this is so nuanced. And it's not like I'm gonna be the expert.
Yeah.
It's just one group of people to whom we're marketing. So yeah.
Sorry.
No, you're good. And that's
No, I
our
really-
job is to know all this stuff and brainstorm and, you know what I mean? He's on the phone with our underwriter daily and we're always talking about ideas of, hey, this borrower doesn't really fit any of these boxes. What do you think? And that's our job. It's our
exactly, yeah.
responsibility to do
That's
that.
good, it's good.
Yeah.
So that's why we like to give you kind of like a little
But at least
base
it's
of
an
everything.
end,
So you're
yeah.
kind of like, oh, I remember hearing something about
Yeah,
that. Let
exactly.
me make a
So
call.
the approach that we take with your customers is a lot of lenders like to treat it like an assembly line. Like, hey, I'm gonna put this. No. We treat it like a custom boutique. If you're coming to me for a $70,000 loan, I'm gonna make it so you get your $70,000 loan the way that you want it and the way that best suits you. If you're coming to me for a $7 million loan and you say you want it this way, that way, I'm gonna do everything I can to do it that way.
Is there, since I came in late, maybe you already said this, is there a special loan? Like my daughter's in the TV and movie industry and you know how that
Seasonal.
industry is wacky. And is there a special program for those?
She union?
Yeah.
So what we do with union employees is we actually average out their income on a 24-month average. That's what we do. So we don't hit them with their downtime because it's expected. So we do. is
We know on their downtime, they collect unemployment.
Yeah,
We can count that too.
yeah, we can
with
count
two
that.
days.
too. Yeah.
Because they said you can't.
No.
No,
yeah,
we can. Yeah.
Oh,
We can.
nice.
It's known for, yeah, the movie business, yes.
Movie business, construction, all of them are known for taking downtime.
Well, they're funny, like, what do you mean your daughter collects unemployment? And I go, well, because she's in commercial, so it's 3 days on, 2 days off. I mean,
Just
Has
be
to be
honest.
all
No,
she's
my-
on Playboy.
remember, it was.
I said, just be honest, she's on Playboy.
No, right? No, that's,
no,
I
she works in
remember,
production, yeah.
that's so normal because I remember when we were in law school, that's when we had like finals or whatever. My friend was a Teamster, she 399 driving the trucks, you know, on the sets, but then when she needed the downtime, you know, because she could take it off, she didn't have to, she'd get unemployment, she'd max out her
My
unemployment.
daughter's taking off next week to the river. She'll be collect unemployment next week.
Yeah,
Work hard, play hard. That's what I have taught
yeah,
her.
they should have their own products, just like they have their own unions and special.
Well, yeah,
insurance,
so that's why I was
yeah.
curious. So like, for example, she was told, and even their taxes are wacky, right? Because you're 1099, she's all freelance.
Mhm.
So like she's 1099 on some jobs and then she's W2 on some jobs. And then, so originally she was told that she had to have 2 years of her taxes, but you're saying it's just 24 months.
To use the 1099 income, we're gonna have to have that report on the taxes. We don't use the 1099, but the W2 stuff's just gonna be a standard 24. If she has enough from the W2 to qualify and the unemployment, then we don't need the taxes. But her 1099 stuff is gonna be different.
Do they look at time in the industry? Because like, you know, like like a real traditional lender would say, oh, we're job hopping, but it's not, it's different.
We
It's
had
the
one,
same
we
industry.
did one recently, 23 jobs in the last 12 months because it was.
That
union.
must have been millennial.
And it was one that he- because, you know, his wife literally has to call and fax 23 employers. But
No,
yeah,
no,
in the
but-
union, it's okay.
No, but here's the thing, so the way that it works for commercials, because she's in commercials, is every production company uses whatever payroll company that they
Yes.
use. And so that's who you're employed by, not the production
And
company.
there's residual income from commercials she's done 4 or 5 years ago, right? If they're still running.
Royalties and whatever.
Well, no,
Yeah,
because
there's-
she's
no,
a
well-
second AD,
Okay.
she's not an actor, or something like that, but, so she's a second AD, but,
We can use,
Same
All
time in
right,
the
no.
industry.
Because it's in the same industry.
yeah, so like, for example, when she does unemployment, she's like, oh, job ended, because the commercial ended, and then next week she's on a new job, and then next week a new job, and
What I
then,
would ask her for is, I would ask her, give me all of your W-2s for the last 24 months or 2 years. Give me your union card, so we show she's a member of the union.
all pay stubs year to date from every job you worked, your last pay stub from every
they
job.
have
you
to
worked.
keep a book, you know that, they
Yeah.
have to freaking make it.
And then we write a letter of explanation that it is the nature of her job.
And especially
And
down
is the interest
here,
rate higher than for that?
No, it's ideally you want to go Fannie, Freddie, you know, standard conventional loans. I can't see a company outside of Southern California having an issue because it's so common here in the area.
Yeah,
Well,
here,
that's what I started to
yeah.
say. So First Entertainment Credit Union,
Mm.
you know, she was told, so she has money in there because supposedly they are easier to lend them, but now you're saying there's other programs.
Credit unions are private money, so they're a whole different ballgame.
Okay.
Yeah,
Much harder,
they're harder to get, it's harder to get money through a credit union, yes, 100%.
even if
Are
it's
these
that
all the same and
entertainment.
they're just
credit
tripping balls?
You would think the entertainment credit union wouldn't be so tough, but that's a good one. I don't know. I don't know the answer to
Yeah.
that, but I know specifically, they're just very picky with who they want to lend money to.
Well, yeah, so we won't be able to buy until the end of this year. Because that COVID year messed up, because she only worked 6 months, so she doesn't have the 2 years taxes. So we had last year, and then we'll try to get qualified for the end of the year.
There were 24 months, not 2 years. So 6.
I know, but she just moved up to second AD
Mm,
at the end of 2020,
Got you.
so we're half, a year and a half
Yes.
at that new position, so.
Then what we do is we explore everything, so I'm not gonna just like do crazy and what I call Mexican math right there, you know, Paul's like, get out of here, no. We go through everything, order verifications. and done.
Well, and her boyfriend, actually, combined as a firefighter, so it's like, which
Oh, how
one is gonna be
cute.
best?
We look at income a little bit different than other people, we actually deep dive loans.
Perfect.
Yeah, traditional, a pre-qual that a lender's gonna do is the borrower fills out an application, maybe online, tells the loan officer, I make $150,000 a year, I have $100,000 in the bank, and the loan officer literally says, here's your pre-qualification, that has this huge list of, guess what, it's not really, this doesn't mean anything, right? I can weasel out of this piece of paper 1,000 different ways. We do it differently. We ask for everything up front. Your pay stubs, your W-2s. If they're self-employed, yes, we're gonna ask for their taxes. We have to. That's how we're gonna generate the income. And then we get them actually approved with an underwriter. And then therefore, when they're making offers, they have a pre-approval, not a pre-qualification. And it's never gonna take more than 24 hours. If they submit a full file, it'll never take, so we spend an extra maybe 10 hours, 15 hours in the
On the
beginning.
front end and then-
And then you have no drama in the back end.
But I thought it was, but I thought the pre-qual was only a certain, good first 90 days.
It's good for 120 days, technically, that the credit report's good for.
I tell people this, if you don't mess up your credit or buy a car or pay
So
something late,
extras.
or get laid off or change your hours, it's good forever, as long as you don't change.
Yeah.
And then,
Yeah,
but if you go out and buy a car
credit's
tomorrow,
really
then that pre-approval's, not worth the paper.
So then if we want to try to buy at the end of the year, we would start, is that crazy machine, all her paperwork, we probably start, what, like September, October?
I would let her know now,
Yeah.
they're gonna want, all your pay stubs, so make sure she puts everything kind of in a box. We usually say 60 days before you wanna start shopping. Let's say there's something that's showing up erroneous on her credit that needs to be fixed.
No,
You can get it, if things come up, it's better, it's easier, the more time we have, it's easier to fix whatever we need to fix.
okay, so technically we could get started here. and pretty soon. Okay. Cause she asked me, she's like, you're going to that meeting today. Whatever, yes, I'm going.
And then we have what's called a TDB approval process, to where we will we'll give it to you in writing, a full underwriting approval if you want to go out there and represent your buyer and not have a loan contingency, which a lot of our agents are asking for now. So hey, they're fully approved, we can go in with the loan contingency removed. If you guys choose to, we can ever advise or not advise, for the liability part, but yes, we have that to where that one takes a week. So once we do our pre-approval process, the second layer is we send it off, and then an underwriter, instead of just saying yes, will actually put their name on the file. And that is just, they're gonna go through and do a little bit more thorough review.
And crossballs, we're always ready for a crossball, right? So, we do a whole packet, so our approvals they're not really questioned very much.
But I would say this too, if Christian is representing when your buyer, or your buyer is pre-approved with Christian, be proactive with them, and if you put an offer on a property, copy him and let him call the listing agent and just tell him how strong the client is. We've noticed if we take that kind of preemptive strike with the listing agent, they're not gonna push you through, they're gonna talk to him, no, he's got 10 years of experience right off the bat, that he's not BSing, because I think the lenders a lot of times are a little sleazy and they're worse than car salesmen. Us, of course, not included in that, right?
We were gonna change the car.
But so just him talking to a listing agent for 2 minutes on, the specifics of the file, that he knows what he's doing. A lot of times will alleviate a lot of going back and forth and put your borrower in the front potentially.
What other states are you guys
There's 17, and I will have him send them to you.
We,
Because I want to
Count
go to
'em.
Arizona.
I have Arizona, Nevada,
I have to reach
Texas,
over you.
Colorado.
You know, you have to reach.
We've got almost all, we've got all the major ones you want to live in.
Missouri, no?
No
Yeah.
Missouri, but that, a lot of people ask for Missouri for some
A lot
reason.
of people do.
That's
actually.
weird.
Some
Well,
of
no,
the
we
states are
could-
hard to
we
get
could,
licensed in.
It's a
Yeah.
good place to go. There's a
Missouri's
government
black.
transportation there.
Oh, I just like cold.
I think out of the whole
Cold a bit.
west coast, I think Utah's the only one we're not, from like Colorado up. Like, trying to envision that, but 16. East Coast wise, Florida, yes, Maryland, yes, those are the
Georgia.
two, and Georgia. Those are like the three. East.
Pennsylvania and Maryland.
Oh,
Pennsylvania,
Yes.
but yeah, he'll email you guys the all. Because a lot of times now you run into people like, hey, I'm moving out of state.
Yeah.
We're doing more out of state now than we have.
Mhm.
You know, yeah, a lot of Texas, a lot of
I was gonna say,
Oregon.
Arizona, it's the
Arizona,
same.
The way we structure that for you guys is we pre-approve them, I hand you the pre-approval, go find an agent in another state, send you your referral commission. So you don't lose on the purchase.
Yeah, they're more likely to give you a decent referral if I have a pre-approved buyer that's, you know.
Yeah, sure. Like it's ready to go.
Yeah, because I want to buy something. I want to be out there next week.
Taxes are lower too.
Well, it's just, yeah.
I just learned Oregon, I have a buyer in Oregon right now that the taxes never get reassessed, which is crazy. So they're buying a $600,000 house in Oregon and their taxes are gonna be $2,200 a year.
That's like Prop 13 on steroids.
Yes.
Oh, we bought the house in Missouri. We bought it for 280. We paid cash. I wanted to refinance it. And I couldn't I had problem refinancing it because on my house, I'm not on our loan,
Mhm.
but I am on the deed. And so they counted me for the property taxes, which are like 38,000 a year.
Because your husband down, because your husband, well, you go, oh, okay, yeah, it's not finance, your house here. I was gonna say, it's.
I'm only,
Finance,
yeah,
yeah.
so that one, I was just trying to refinance it so I could put it in my name only out in Missouri without him. And I was trying to get the money out and pay the credit line back off.
Actually, we've gone around that before. He needs to do a letter of explanation, your husband saying that he takes care of all the bills.
I know, I did all that. I still couldn't do it approved.
Really?
No, the guy was such a dick. I'm like, really?
Wow,
Stuff.
I'm surprised. So you could do letter of
Pissed
explanation,
me
that's
off.
good to know.
Yeah, I wasn't on the loan. You could show that I was only on the deed. I'd have to quit claim it. So they said I have to quit claim me off the deed.
I used
Then
to have
after
to
the
do that
breakers, then
too.
go back on. I'm like, I'm not doing that.
Mhm.
They would have just taken us, if we would have been doing that one, letter of explanation from your husband saying that he takes care of all the bills, that you don't pay anything, that he's your sugar daddy. And there you go.
How about second homes, like for people that want to buy something in Palm Springs or Big Bear or an Airbnb? How do you guys structure those?
Second home's always gonna be better than investment because second home is gonna be 10% down. So as long as it's in a second home, destination, Big Bear, Palm Desert, or Palm Springs, whatever,
I would
easy.
too.
If they go the day after and decide they want to Airbnb it or rent it out and not live there 50% of the time, we're not the, the CIA.
I
We're not
thought
gonna
it was only
investigate
20%.
it. And second home is basically you have two homes and you split the residence.
I have a.
For tax purposes, it might be 20%.
I think
I don't know that,
it's 20%,
but for,
yes.
as a lender, you're saying, I'm gonna live in two homes,
And here's 10% down?
10% down.
You're saying that the home, that it's a destination location, it's not like the whole 150 miles away thing
If you
anymore?
want a second home in Victorville,
They're gonna be like.
yeah, why? Unless you're gonna open a meth lab.
Yeah, I was like, you can tell, I just say that, that's okay.
Yeah, so they're gonna question that. They're gonna think you're trying to buy an investment property without
So
paying
they,
20%.
so it's
Letter of
not, it's
explanation.
not a geographical thing anymore.
It has,
It's a
well, let me
place.
say this, we've documented
Because
that,
we
guess
got
what? My daughter and my grandchildren live in Victorville, and I wanna help them, so if we can document something, then we're done. Letter of
Okay,
explanation.
so
So there's,
that's
That's all
No,
about.
because my parents hooked me up like right that way too. And I was up north and they were able to say second home because it was NorCal. But under these new of course, this is before everything, this, okay. But now with the new parameters, they wouldn't have gotten away with that because it was in like Yolo County. Like, what the hell's there?
No, we-
Yeah.
no,
it's
we-
almost a story to it. Why
It's all-
are you gonna live there 50% of
It's
the time?
all about in how you explain things on paper,
And
with a
he's-
letter of explanation.
Our only child lives up there by herself
There
with the
you go.
children. So
Done.
that's it.
Done.
So he could, so it doesn't have to be destination as in Mammoth or
No.
Aspen. It has to be a destination on an individual basis.
Correct.
Okay.
They're never gonna ask questions for Big Bear or Mammoth, ever. Like, that's a
Okay,
done deal. That's obvious.
so that's why
But
you
if you're
said
trying to
that.
go somewhere, like, I'm trying to go into Sacramento or Fresno or somewhere, it's like, well, why? what's the story? We just build the story.
Your children, your grandchildren.
And most of the time, we don't even need
I
documentation.
have a template for it, don't worry.
Okay, good.
I'll make it fly.
Yeah.
And what we do is we never would commit loan fraud, obviously, but a lot of times we'll just educate buyers and say, look, like, I'm not gonna commit loan fraud, I'm not gonna tell you what to do, but I had a borrower in your situation that did this,
Yeah.
and we never
that's
followed up or
totally-
checked. We leave it to them.
Absolutely.
If they wanna give it to us in writing and email it to us, we're done.
It's on them, yeah.
You're a real estate agent, it could even be a primary.
Especially now with COVID,
True.
you know,
Yeah.
it's
that's-
crazy. I can work from home, we're
And
done.
I still do real estate up there, and I do have clients in my other work up there, so it would make sense, you know.
To have
okay,
Oh,
so-
and a
two
settlement
locations.
statement from a house you closed up there, showing you do business in there, we're done.
Yeah, or if something else for work, right? As long as I can show work up there, okay.
So I have a question, so, on the whole, is conventional still the 20%?
Three.
So like if I wanted to gift additional money for the down payment, I was told that you had to gift directly to escrow.
Yeah, so
Not
you
to her.
wire-
Well,
First.
that's a preference because we don't wanna show your bank statement and we don't wanna show her bank statement. So that's a way around us showing all this extra paperwork.
So you can gift, so I know that you can gift your kids, it's $16,000 a year now, it used to be 15, now it's 16, and you can do that every year. Tax free. But how does the gift work if you do more
I
than that
think
for something like that?
That's if you're going from her bank account to her.
Yeah, so like I can
But
give,
if you send money to escrow, I don't think for that's,
there's no, I can
that's
bring
not,
it
that's not
up,
a
right?
gift from IRS.
No, that's what I was talking about, that's not true. And I'm like, yes, it is, I'm going to this meeting next week, it is
Talk-
true, I'm gonna
talk to-
verify that.
Talk to your
it's true.
CPA, but we have gifts, $300,000-$400,000, and
I
I've never
know,
heard of
right?
doing a tax application to that, but it gets wired directly to escrow, so why would it,
And escrow doesn't care where it comes from.
the only thing they're gonna report to the IRS is if you sell a house and you have proceeds coming back to you. That's the only thing they report to the IRS.
And Eddie, just kidding.
Because I remember when I bought my house, and then they just did it in a promissory note as down payment. And then we ended up paying the uncle back through the promissory note. But if the promissory note was good enough as the gift.
Mhm.
Basically.
Yeah.
Right?
That was the case.
Yeah,
I'm like, I know, that's not
See,
true.
I used to do the same thing with all of my ex-husbands, right? Well, I think the first two, I would quit off, like, you know, for the loan and stuff, but then it gets you later, especially in our line of work where we're like fruitcakey on paper. It doesn't make sense.
Well, because I
Yeah.
want to buy something that has without my.
Mhm.
So. I think kind of-
Arizona's also community, there's only 9 community property states, California and Arizona being 2 of them. So he does have to sign off on a deed if he did.
Oh, quick claim.
Just random.
I didn't know that only 9 of us are CP. I didn't know that. I thought more were that.
Only 9 or what?
And Arizona's always a surprising one, usually. it
That's
would not
very
be.
surprising. Well, because in law school, we have to learn everything no matter what we decide to do. And so community property is a huge thing because California is
I know.
painfully lenient with community property and as you know, with the tenants too. And so the way that it was presented to us is that it's a pretty common thing like across the country. I didn't know only 9 of us are community property
Really?
states. That's
Is
crazy.
Missouri one of them?
But
I
here's the
would
thing
doubt
is
it.
if you go get married in another state and then come here, you know, because you're trying to avoid the CP thing, doesn't matter, you get divorced here, it's half, it's everything. Yeah, it's,
You know, my husband always says, it's cheaper to keep me.
that's what, that's what yeah, exactly, that's what you guys tell me.
The Jimmy Market, he's like.
My
"Nah."
wife keeps watching those murder shows.
Cheaper
so I don't
to keep
know.
Love
Like
is
you're-
grand, divorce is 100 grand. So.
Oh my gosh, how cute, that is so cute, I
What is
read
it?
about
What is
that,
it?
yeah.
Love is grand, divorce is 100 grand. So Chris, what do you guys all?
Nice.
Is there anything that you guys can help us for marketing, like your
Oh, we were
programs
gonna
and-
ask that too.
Yeah.
So do you guys have like postcards that we can, that you can provide, and then we can get our title reps to give us like mailing labels and stuff like that?
You let us know, it's all, we
Yeah.
can cover printing, we've done flyers before
Yeah, he
because.
does my flyers, but I want to market some buyers like in like apartment buildings and stuff.
Yeah, like specific, like, or like when you guys.
They think they
get,
can't afford anything, so they're renting.
Or like the
Yeah.
first responder program, like when it's not gross, you know,
So do you
something
guys
to
have-
We
pass
would
that out,
rather-
that kind of stuff.
First thing is, yes, we can do anything as long as we're showing that we have loans that are closing to show our, our company, right? We're not our company, we work for,
Yeah, eventually.
There's an owner of the
that's
company.
always- yeah.
as long as we show them, hey, we have these loans coming in and here's, what it's gonna cost for marketing, 100% yes.
Okay.
We'd rather, because we are heavily regulated, where real estate agents aren't from a marketing standpoint, the amount of, if we mailed out any of this stuff, the amount of verbiage would take up the entire thing. You'd see the flyer here and then this much of all that stuff.
It's more
So we'd rather
effective.
just promote you,
Yeah.
we get the leads or whatever, you know what I'm saying? Like, you know, you promote yourselves, hey, just sold and stuff like that, because you
Sure.
guys aren't regulated as much as us.
Nobody wants to see a lender on a postcard.
So yes, but absolutely, yes.
That's true.
You get with Christian, find out, you know, what you guys
Do you
want.
guys have templates, Christian, or do we have to make something up?
If you send me roughly what you want, I can send it to our marketing lady and she'll make something up.
Oh, okay. All right.
Yeah, just get us, you know,
Yeah, just give us something. What-
Something from
what you want.
Remax or
Yeah.
Keller Williams.
Yeah.
Oh, cute.
Steal-
Yeah,
steal
I
something-
got
steal
no
something you
shame.
like.
I did.
Or something you like and we'll make it
or let us
happen.
know, you know,
Yeah.
we can go into the
I
database.
think you guys have a lot of great products.
Yes.
So, yeah, I would like to do some marketing to get some more buyers.
Yeah.
And a lot of people don't really know that much about us, even though we've been around for what, 36 years?
I've heard of Franklin, but I didn't know it was lending.
86.
I've heard of Franklin too, but I
86.
know.
I didn't know that they were
34,
lenders. I thought it was
34.
like an investment fund or something, like a pro used to be.
Oh.
Wow, did I just say prudential?
Well, we actually started off as a stock brokerage company.
Yeah,
See, that's okay. Yeah, well, you know, we just dated ourselves, girl. Like, what? Yeah.
I was like, I'm pretty sure, because
Yeah.
I worked for a manufacturer.
Oh, God, that was it.
I worked for Manulife, but it was manufactured life insurance back then, and I kind of remember.
Thank you.
saying, Yeah, right, and I'm like,
They started off as a
I'm like, I
stock
know how to-
brokerage and the mortgage game was their side hustle, but then they realized. that
That's
the
how I
mortgage game was-
remember it. I
yeah.
think my
Oh,
dad had something
yeah.
with Franklin when I was little. I think that's what it is.
So what are
That's
the
really
rates
cute.
right now?
It's-
And what do you foresee in the future of the
Yeah, what's
market?
happening?
What's
They've
happening?
gone up drastically, right? At 0.5% in the last 30 days.
so
We're
is that five right
starting,
now?
we're 5.3 on a conventional.
And then when is the next jump? I've
For-
heard four
In
more
7
times.
minutes.
Well, so remember, the Federal Reserve controls short-term rates, which have no effect on the mortgage rates, right? Mortgage bonds are what's gonna affect the mortgage, but everything's kind of related. It's all speculation.
Mhm.
So no one knows. Supposedly, we're supposed to start seeing them stabilize to start going down by the end of the year.
Oh, okay.
And they're probably gonna be in the 4.75 to 5 range for probably a while.
Okay.
But
Oh, we don't wanna
it's
tell
new
our
territory.
buyers
You know, the
that.
inflation is out of control, right? So
Yeah.
that's throwing it in there. It's just kind of a weird situation to where we probably were gonna be facing a recession maybe 2-3 years ago, and then it just kind of goes. So, and then everyone's saying maybe 15 to 20% reduction in prices, right? That's what most experts are saying,
For next year?
or for eventually, when the bubble, whatever the bubble is.
Oh, and then
whatever
we
it is.
get the buyers to say, I'm waiting for the market to bottom out.
'Cause remember, every loan,
Okay, yeah.
every loan we're doing, with maybe the exception of the state income loan, but those people have a lot of money in the bank, so that's kind of like,
Yeah.
it's not like it was in, 2006, 2007, 2008, where it's just like,
Mhm.
it's just, no one's gonna be able to afford these. They're negative amortization loans, they're interest-only loans, they're adjustable rates. Everything now is fixed rate,
Yeah.
and these people do qualify on paper.
But I read a thing this morning, that like one of the lenders was saying that ARM products are increasing. And that gave me some hope, because I know she's struggling with a couple buyers, from earlier. But the thing is the neg ams and the short-term fixed, like they get some people stoked that they might be able to get in, but not realizing that there's all this other stuff that they need. Because I didn't really see you boasting any short-term fixed stuff. Is it just because it's not reliable?
It's not
or-
worth it.
Right now,
Okay,
there's not a
good.
huge, we don't notice a huge difference between the
Because there was
adjustable and
like
the fixed.
5, 7, and.
Because some
10-year
people,
ARM
yeah, I
at one
think
point.
like
still
more
have them.
seasoned people
They're
can
just
take
not-
them out.
they're not
but-
doing much.
They're not worth it.
They're gonna save you
So you're
maybe a
not-
1/4%, is a 1/4% worth that? I don't think so.
But see, that shows your honesty too, because you know that product's got game. I mean,
Well, of
that's
course,
serious.
as a
hustle. You
lender
make a
for
lot
us,
of money
that
off
guarantees a
that upfront.
refinance in
Yeah.
5 years.
Oh,
That would,
yeah.
if we were just worried about the money, we'd put
But if
everybody
you're
in those.
not
but
even
it's not worth
talking
it.
about it, that's pretty honest.
And
That's pretty cheap.
something that I do, most lenders try and put everybody in an FHA. That's their go-to, FHA. 800 FICO, 20% ETF,
Yeah,
FHA,
those are
FHA.
hard.
What we do
I don't want
is,
FHA.
if someone comes to me like that, they're a conventional buyer. And the reason I do that is because I tell them, my goal is not for me to call you in 6 months, hey man, let me refinance you. My goal is to put you in the best situation to treat you like family.
Because it's a relationship, and in the long run, you're gonna get more business from them. Even if you don't sell them something, if you're that cool, or, it comes back.
Some of the best referrals I've gotten are from people that didn't qualify for anything.
Same here, and I've, people I haven't been able to help, I have gotten a lot of business from them, a lot. It's weird, So,
Well, that's what we do. We try and treat everybody like family. So like I tell every buyer, I was like, this is the same number I avoid my mother on. I only have one phone number.
That's so funny.
So,
I think he's got his trip, but, the,
oh, yeah, okay.
that works.
I have a question. I know when you guys do down payment assistance, I do see a lot like FHA, but can you guys do down payment assistance on a 3% conventional?
Nice.
It's just the rates are a lot higher.
The rates are higher.
A lot of times what
That's,
happens.
that's set through, so for instance, you use Calhfa, you use GSFA Platinum, whatever you want to use. They're not our rates. Every lender in the world uses the same rates, and the conventional ones on Calhfa are like 1% higher. So a lot of times it pencils out just to do the FHA.
I'll tell you what, though, on Calhfa, we're the bank that charges the least to do it in all of California.
The thing with FHA though, it just seems like, I'm not experiencing it because I'm not back that busy yet, but I know that the FHA thing can also be a deterrent in a competitive situation, right? Because they're gonna,
Yeah, it is.
yeah, like.
It doesn't have to be, because think of it this way, my max debt ratio, not to get nerdy with all these acronyms, mortgage acronyms, but my max debt ratio on a conventional loan is usually 49%. FHA can go 57%. No bankruptcies or foreclosures for 4 to 7 years on conventional, 2 years on
2 years
FHA.
on
So
FHA.
if I want a solid buyer and I'm selling a house, give me an FHA, because FHA is basically like super liberal. And that's where he comes in to talk to your listing agent and say, look, you could have 20 conventional offers. I have an approved FHA loan that'll close in 21 days. So you're an idiot if you don't take it. Because
But I
bottom
mean,
line
are they
is,
still being weird, like fire door this, all that? Like, are they getting into it really?
It's
That's
more-
what I worry about for a buyer.
it's more, what, the oven has to work, the heater has to work,
Oh, okay.
stuff like that.
Habitable.
Something you'd actually-
Habitable, that's
How
basically.
you doing?
Bye.
habitable. So
It's just the
cool.
basics of stuff that you would actually want to work in the first place. You know, you don't want to put someone into a place with no hot water, you know?
FHA is 57%.
I didn't know that.
56.99,
Uh,
but yes, and
That's
conventional is
really
49.99.
generous.
Yeah, the only problem with FHA is like, well, it can be, the property can be too messed up. And then also
That's what I'm
some on the
saying, yeah.
listing terms don't even accept
Mhm.
FHA.
Yeah.
So then it's like conventional, you can have like so much more properties. you
There's
know?
also a
Like
lot
They
those
don't put it, yeah, the
Yeah.
real estate agents and
Yeah.
listings are putting no.
And some
also-
condos can't go FHA.
Yeah,
They
they're
don't keep
saying-
their
Yeah, they don't
books.
qualify.
Yeah.
Condos are tough,
A lot of
condos
them-
have to be approved.
Yeah.
A lot of them are saying
That's
no
how we
FHA, so it's
And a lot
like,
of it's not because it's actually valid, it's just an agent was told, their broker from 1974 said FHA loans are hard, a lot of it's
mhm.
not real, right? Like,
Yeah.
so,
We've
That's why
done-
we asked.
yeah.
We've done
Mhm.
FHA loans where they're like, well, we don't want to take the FHA offer because there's an illegal addition. It's not a problem. Like,
That's-
as long as it's done in a craftsmanship-like manner, it's not falling apart, leaning, I can see sky through it, we're okay.
it's the same, FHA and conventional have the same role in that, it can't be sold if it's not permitted, the square footage can't be in the price. But just, and as long as it's not falling down, we're done, it can be there, they're getting it for free, so to speak, but the seller can't charge you for the square footage on an unpermitted addition, that's the same.
And if they're forthright with what it is they actually think it is, we tell them, okay, is this gonna be a problem or not? Or if we're like in doubt, we call
We call the appraisal company and just say, hey, this is what we have, here's picture, if you have pictures of it,
send
will
it.
this be an issue going FHA?
Just
And then we can talk to the
no
listing agent and say, I talked to the appraiser himself, he said it's good.
Throw some spray paint over it and call it good. There you go.
I had a
Good.
question on the down payment assistance. Aren't there income limits? on
There are,
that?
there are some programs that are, there is not,
Oh,
but I would always use the sale price of like 700, anything more than 700, it's probably not really.
So
Calhfa.
Southern California.
Calhfa
Yeah.
for the non-10% down one out here in LA County, I believe it's at 156, 157.
Ish,
100%.
combined income.
Yeah, so I mean, that's still a good income to be able to get a house. We did that one with the Castellano family, what'd they come in, $5,000?
I know.
$12,000, that's all they have.
Yeah, then they
Nice.
got most of it back.
It's a-
And then they got a check back for 4,300. So total to close on a $650,000 home was 5,700
Oh my,
Total.
total. Come in with
Mhm.
this.
Total
That's
cash
it.
flows.
cash to close.
And you guys did that and you did that too, though.
Yeah.
Mhm.
And we use this acronym, right? All your loans are gonna fall out, other than appraisal, other than title, but from a loan company, if the lender screws up, CIA, credit, income and assets,
Mhm.
right? The lender didn't check the credit, or the car they bought, the brand new car wasn't reporting on the credit because the lender didn't ask, did you buy a new car recently? Income. The lender didn't calculate the income properly because he didn't send it to an underwriter, he did it himself, and, oh, they said they made 10,000, they didn't make 10,000, and then assets. Do they have money in the bank or not? Did they just put the money in yesterday or has it been seasoned? When you get Calhfa involved, they don't need money anymore. So one of the 33% of the reason they're gonna fall out is now been eliminated. So I would argue with the listing agent, the Calhfa loan is stronger than your conventional loan because it needs less documentation. Because your rich uncle Calhfa is giving you the money to buy the house. You know, so a lot of times there's all these misconceptions where it's a crazy market. I'm not gonna get down payment assistance on this because they have 20 offers. Let him call and educate the listing agent that Calhfa is stronger than conventional, because it is.
Yeah, and I think Chris is right because we had one that we submitted and it's the solar panel. And I gave her DU, and then the listing agent is asking me, well, the DTI, and I said, it's on the DU, it's not, the $60 is not gonna affect it. Well, I don't have the FICO score. Go to page 3, the FICO score is 807, 802. So I think a lot of these listing agents don't know what a DU looks like. So on your on your caption, you put DU, the FICO scores, because they don't go through the stuff. So we still didn't get it, but they wanted me to remove appraisal contingency and I just couldn't.
Oh my gosh, I was shocked when I saw that people do that. But now, right now, that was.
But I think a lot of times the listing agent doesn't know how to read the DUs, so. That's all I have to say.
And then if you have a regular borrower that works a regular W-2 job, all I need to do an approval is W-2s for 2020, 2021, 2 most recent pay stubs. If I need to pull like thousands of dollars of overtime, then I start asking for pay stubs from the end of the year. That's all we need, and full credit and 2 most recent bank statements. No hunting down tax returns, none of that stuff.
That's my only, I do the internet. And.
Same thing for
And
like
speak-
1099 and like
1099,
LLC.
1099 analysis, we actually need business and personal and business tax returns. So when anything's like 1099 or
Oh,
LLC.
Christian.
we get-
And Chris.
Yo.
Yeah, Christian and Chris, right?
Yes.
Mhm.
He's your main contact for everything, right?
Unless we have a complaint. then we can-
Then you call me for the complaints.
Are you lost?
Yeah, technically, I'm the branch manager.
Where's the branch?
I report to him.
I go pull the car right now. I'm just kidding.
Where's the branch?
We have several, so Riverside and Rancho Cucamonga.
But he does everything online.
Yeah, we have several loan officers. No one comes to the office anymore, so that we do a lot of LA business.
Okay.
I had a client that was,
Yeah.
Email.
Email or phone. No, whatever they say.
yeah, we had a crazy client that would text Christian at 11:30 at night or something, remember that? And Christian did respond and said, hey, I will talk to you tomorrow. Let's go to
Exactly,
bed.
it's 11.
So, yes, what was his name?
Oh, Albert.
Albert, yeah, Albert, he was, but Christian always will text back, and if it's too late, he still responds and said, hey, we'll talk tomorrow.
Is that the Carson, Albert? That Carson house that you sold, where you got your buyers into that?
No, this wasn't a client that I met, a referral. And also another loan that I want to brag about was my clients had a lot of debt, credit cards or something like that, but the one in LA. What's her name? Her mom just passed away.
Dolores.
Dolores, and so some debt was paid through the loan. Right?
Yeah.
What loan, what was that? I
It
don't
was an
know.
FHA.
An FHA, the credit cards were paid through the loan, and I got them into a house with 525, 2 bedroom, 2 bath. And FHA, and they paid their debt, so they bought a house and debt free. Yeah, it was a really nice house.
It was in LA.
In LA, yeah, really nice house. So that's why I don't know these programs, so all I did was, hey, Chris.
Well, especially how it's changing.
And then he runs the credit and everything, and
You
and
know?
he said, okay, this is what we're gonna do,
Okay.
and, yeah. So, so it's all, you know, I don't know the programs, or he'll tell me this is what we're gonna do. And another funky one that we did was the lady owned a restaurant, had over 300,000, but in the business. So, we brought someone in that bought it, and it was gift money, and we closed it.
They had been turned down somewhere else, right?
Yeah, and they were turned down somewhere else. So
So how did
It was
She
gift.
I'm glad she
Oh,
came because we're
so-
looking for a
Yeah.
partner. We're
For a
building
business gift.
our team
So-
right now. And
And it was
so
under.
that's a
it was
good
like
thing.
under like 4.7.
Because we don't have to season, so if,
Yeah,
for instance,
no
if a family
secret.
member wants to gift you money on a conventional loan, not an FHA, but on
Yeah.
a conventional loan, we don't show the bank statements, we just tell them to wire the money directly to
Yes.
escrow. They fill out a gift letter and nothing has to be.
It doesn't
sourced or
have to
seasoned.
be seasoned?
Nope.
See, and I just
Yeah.
asked that question too.
And we closed that one too.
Because that money's never seasoned. It's like, oh
Yeah.
crap, yeah, so it's
And I'm
fine.
like, I should
Okay.
sell tacos. She had more money than me in
Yeah.
her bank account. She had
Oh, yeah.
$200. Right?
Yeah,
Yeah, she sells tacos.
super
I'm like,
sweet lady though.
Yeah, and I'm
Uh-huh.
like, shoot, I didn't need to
That's
sell tacos
delicious.
instead of houses.
So if you.
I know, I always say that, I'm like, we're doing the wrong.
Yeah.
All that money for your down payment
That's really good.
takes your savings down. Is that down the line?
No.
They don't-
Unless you own investment properties, and that's the point where you're gonna need more money in the bank after your down payment.
And we'll tell you, like, usually the system will call out how much you require in reserves. Usually if you're just buying like another primary residence.
If it's your first home too.
Yeah.
Yeah.
You
Then you
have-
can-
As long as you have $1 left over, you're fine.
$1, yeah.
I thought You have to have reserves. I'm like, I don't think so. I need to.
Before, that's what's crazy. is they can
Why
just-
is it so like my husband owns a business. We always have a problem with buying.
What do your schedule leave look like?
And he's
What do your schedule
solid.
see? I mean, so do you guys do corporate and business?
S corp.
You guys like to write off money because you don't like to pay taxes. So on
Yeah.
paper, you don't look like you have a lot of income. That's a common problem.
Well, no, I mean, because we take out a salary, so.
Okay.
And then, but yeah,
Is your salary gonna be enough to, on paper, qualify for the loan? Because remember, you probably expense everything through the corporation, your cars, your house, right? So you don't really need that much salary.
That's the caveat when we work for ourselves is we compress our taxes, but then we need to inflate them.
Uh-huh.
It's, you know, it's
right, and
like,
so that's what I was
Yeah,
telling my
that's
daughter,
my
because she
credit
had
card.
some that
It's
was
two
1099, so she
opposite
wrote all the
protocols.
stuff off the 1099.
It's the flip phone.
But then the CPA messed it up, and my specifically asked if they knew how to do that, because that issue's tricky on what you can write out, like she gets to write out
The flip
concerts and Hulu and Netflix.
There's
and-
a lot of
Thank you.
CPAs that really, seems a lot from looking at tax returns, they really don't like your taxes.
Well, no, and so I had to get an extension because he did it wrong. I'm like, you're missing $30,000 of her income. What in the fuck? I mean, like, that's a big jump, $30,000. And he's like, no, I'm pretty sure. And I go, no, it's not on here. I looked through every freaking paper.
That's all.
He's like, you must not have given me the W-2. I'm like, no, I know I did. So I had to get an extension. Now I'm gonna get penalized.
so imagine that happening in your escrow. That's something.
I was so
hate to
mad.
write.
So I need to clear that up, which I'm gonna do like in the next week and a half. But
What we run into is a lot of like taxes like that. We're just like, whoa. And then usually if we found something weird, like a lot of times we can do a letter of explanation too from the CPA.
Taxman's an idiot.
Okay. Yeah, very much.
Because we look at taxes a lot, right? Like,
Yeah,
yeah, so it's
No,
just
but
crazy,
I
like,
mean,
I've
obviously,
been doing this
yeah.
for 22 years.
Yeah.
I'm like, what is this on this line? I'll talk to the CPA, and it's like, well, because this and this, I'm like, all right. You can get the same deduction by just putting it here where everyone else does, but you're creating red flags, but yeah.
and he's like, well, maybe you should go to more
Well, they get
entertainment,
very-
entertainment CPA. I'm like, I specifically asked you. What do you mean? Like, I asked you in February, so it'd give me time for April. And then he gave us the tax return the Friday before the taxes were due, and it was wrong, and said she owed 5,000. No,
You have to shop around for accountant because like they won't
it's
save
my
you.
husband's.
If they have to do more
Poor
work,
guy.
they don't want to save you money, when it's like, when you're kind of self-employed, maybe having an LLC S corp would be better. Because, self-employment tax, but it's like, even my mom's accountant, he wants to do less work, so she had to pay $18,000 in taxes. When she could go to another CPA who's willing to like $1,000, you can get like an LLC S corp, and she probably wouldn't have had to pay $18,000 right now. Like because
Just
her
1,000 and she
other
would be
yeah.
official too.
her
I
other
think so.
coworker basically she's like, oh, I have an LLC, I paid $1,000, and she's like, I didn't pay anything in taxes, pretty much like
Oh my God.
but obviously doing those kind of taxes is more work.
Well,
Sometimes they don't
Someone
want
had
to.
her LLC,
Yeah,
and
to
so
do.
someone under the LLC, the 1099 one under the LLC.
Yeah.
How about the FHA 203K?
Oh my gosh. we
The
were
problem
gonna
is
ask
they're
you
not
about
realistic, right? That's
that.
it's a whole other game. So you're paying usually about 1.5% higher on the interest rate, right? It's a different rate sheet. So your borrower is gonna finance all the improvements and the improvement and the contractors have to be approved on the FHA list, right? So you can't pick your brother-in-law that'll do tile for you and your
Yeah,
cousin that can do this for you, right? So you're paying probably 120% on the construction, and then you're gonna put that all into the price. And then what where you're gonna live for the next 6 months, it's a mess.
yeah.
We do
Especially
them, there's on
right
a flyer, but I would
Yeah.
strongly suggest no, because yes, you can finance your improvements, but
So do you guys have programs for investors or flippers or no? Just direct?
we don't lend short-term money, so if they're gonna,
No,
they're gonna,
Bridge,
yeah.
except for the bridge, that's it, right? That's the
Bridge,
only.
yeah.
So
So
bridge
just
loan.
Yeah, but if they're gonna flip, we don't wanna do it.
Yeah, so just consumer.
So if you're gonna hold on the property for 6 months or more, so it's gonna be, 6 payments.
Okay.
Because if that loan pays off within the first 6 months, we lose our commission and we get like,
Oh,
we get something. The company loses more than just our
But there's no
commission.
prepayment penalty, it's just that it just.
There's
it's
no
like
prepayment
kind of
penalty.
like an unwinding almost.
Yeah. It's like, why do we do this?
We get a call from the
Yeah, 'cause it
mothership
costs-
and then. they
yeah,
tell us
yeah.
What are you doing?
happened.
And yet, if we have our branch, it's more than a couple of those a year, we get like, it's like a big deal.
yeah, okay, no worries.
But yeah, if it's a flipper that's gonna, stay there and make 6 payments on it because he's gonna rehab it, then yeah, we could do it.
And that's realistic, 'cause if you're a true flipper, you don't want it for much longer, that example you gave me. That's great.
All right.
We'll stay out there while you guys eat and relax and stuff, and then
Okay.
if
Oh, you
you
guys
guys have
want cards,
questions,
because we want information.
come on by. And Christian's gonna stop by and grab all your cards, so he can email you guys some flyers.
So there's the email.
What do you mean?
Sorry.
Well, yeah. so
Here's
for this
the
raise my-
information.
Okay, so
Yeah, and we want a
Garden
card.
reunion 2020.
Okay.
May, December 2020.
Come on,
So then
here.
they'll pay pretty much double. Each one paid.
So yeah, so union card, right? Union card. Do you have any W-2s from 2020?
Thank you, guys.
Get all the- Especially with-
But now I should have. the 24, right?
Especially by the end of the year.
Yeah.
Oh, sure. Yeah. So I'm gonna have.
Give me a-
Finish the 21,000. $30,000. So can I?
And I.